I noticed it first in the silence. The charts had barely moved, a muted rhythm of red candles that seemed ordinary, but something was off. By midday, while most retail traders were distracted by headlines and hype, subtle signals appeared: thin liquidity, micro-volume spikes, and faint buy clusters that no one watching mainstream charts would notice. It was the kind of movement only visible to someone tracking wallets and order books at an almost obsessive level. At first, I thought it was just another false reversal. Price had been stuck in a tight range for days and traders were growing anxious. Everyone expected either a collapse or a dramatic pump, but what unfolded wasn't immediate. It was patient, quiet, calculated. The type of move that only becomes obvious after the fact. I started tracing on-chain activity and noticed something that made my pulse quicken. Multiple large wallets, not previously active in the spotlight, were methodically accumulating XRP. The transfers were small enough to avoid triggering slippage, yet consistent and structured enough to indicate strategic intent. Someone, or some institutional actors, were quietly reclaiming control while the market slept. The charts seemed deceptive. Candles fluctuated mildly. Retail panicked at microdips, but the whales absorbed it all. Every minor drop, every hesitation in price, was met with a carefully executed buy. By late afternoon, the first signs of volume acceleration appeared. Red candles reversed almost imperceptibly, and suddenly, liquidity that had seemed dormant exploded. The reversal was real, but the market didn't recognize it yet. Here's the twist. By the time most traders noticed the spike, the position had already shifted decisively. Early movers were in control. Retail participants chasing the charts would think it was luck or a breakout they missed. But the truth, the carefully orchestrated, slow-burning accumulation and sudden volume surge, was far more revealing. What I saw wasn't just a reversal, it was a statement. The quiet, unnoticed shift of ownership, the subtle preparation by smart money, and the first stage of a move that would redefine the market. And the full story, how it unfolded, why it happened, and what comes next, is what you're about to see. The initial trigger was deceptively minor. A small regulatory update hinted at potential delays in ETF approvals. Most traders interpreted it as bearish news, expecting XRP to sink further. I watched the charts during the early morning hours. Red candles, thin volume, and anxious chatter across social media. But something told me not to trust the obvious narrative. I started mapping on-chain transactions and noticed unusual activity in wallets that had been dormant for weeks. Microtransfers, consistent and strategic, indicated accumulation. The price didn't respond immediately, but that's the point. Smart money moves in silence. While headlines amplified fear, the foundation of the next reversal was quietly forming. Every dip in price during that period was absorbed. Sell walls vanished or were met instantly with hidden buy orders. Retail panic created the perfect conditions for accumulation, allowing whales to reinforce their positions without drawing attention. By the time the mainstream narrative caught up, the quiet groundwork had already been laid. The lesson became clear. Not all market moves are obvious. What appears as a small correction can hide methodical positioning by sophisticated actors. Timing, liquidity, and stealth are as important as the price itself. And this was just the beginning. By mid-morning, I had identified the key wallets orchestrating this quiet accumulation. Multiple large addresses moved in small, deliberate increments, strategically avoiding slippage. It was a coordinated effort, indirect yet synchronized, absorbing liquidity at every dip. These wallets weren't reacting, they were controlling. Retail traders panicked at minor red candles, selling positions at low prices, while the whales quietly collected XRP in preparation for the next phase. The accumulation pattern was precise, almost surgical, creating a foundation for the sudden volume surge that was inevitable. Watching these wallets in real time revealed the structural mechanics. Every micro dip was absorbed, and every hesitation in price reinforced the floor. The market was being guided, and retail traders were unknowingly funding the very positions they thought they were trading against. The insight, silent accumulation, is often invisible to anyone not actively monitoring wallet activity. Emotional traders see only price swings, Those who read the chain see control, strategy, and intent. The quiet reversal was happening under the radar. Early afternoon trading showed mild fluctuations, but the order books whispered a different story: thin liquidity, subtle buy spikes, and repeated incremental accumulation. Retail participants were oblivious, chasing small green candles and reacting emotionally to minor dips. I traced on-chain patterns and realized the scale: multiple whales accumulating across exchanges simultaneously, moving the market piece by piece, avoiding attention. Each small transfer reinforced support levels, creating a structural floor while appearing insignificant to casual observers. Red candles became a tool, not a risk. Emotional traders sold during minor corrections, unknowingly adding liquidity to the accumulation. By the time anyone noticed, the positions were already heavily fortified. The lesson: in crypto markets, perception often masks reality. Price movements may appear chaotic, but beneath the surface, disciplined actors orchestrate control. Understanding microstructure and wallet flows reveals the real narrative, which most retail traders miss entirely. Late afternoon brought the first visible signal. The quiet reversal began manifesting in real volume. Green candles replaced red, and trading activity surged. Retail traders noticed the spike and interpreted it as a breakout, but the real story had started days earlier. Wallet analysis showed coordinated buying. Every micro dip was absorbed, creating the perfect conditions for the sudden surge. Emotional reactions amplified the move, feeding the accumulation and giving the impression that the market had turned spontaneously. This was the turning point. Quiet accumulation became visible in volume, but the underlying control had already shifted. Retail panic had funded the reversal, and the market's next phase was already underway. The sharp insight: volume alone tells only part of the story. Observing how it is created reveals intent, strategy, and power in the market. By evening, headlines framed the spike as a sudden breakout. Analysts cited minor news and social sentiment as catalysts, ignoring the subtle structural shifts. They never discussed the stealth accumulation, wallet patterns, or controlled absorption of liquidity that laid the groundwork. Retail traders, chasing narratives, misinterpreted events, reacting late to a story already written. Those who understand wallet flows and microstructure could see the shift months in advance. The difference between perception and reality became stark. The takeaway: mainstream coverage lags behind actual market mechanics. Understanding microstructure is more valuable than following headlines. Deeper analysis revealed coordinated institutional activity. ETF delays and regulatory noise weren't setbacks, they were opportunities. Large actors positioned strategically, using retail panic as cover. Micro transfers across exchanges reinforced positions. Timing was precise, and the market structure shifted quietly under the radar. The lesson: institutional positioning often precedes visible price action. Missing these cues leaves traders chasing momentum instead of capturing it. Retail traders reacted emotionally, panic selling, chasing candles, misreading support levels. Each misstep amplified the quiet reversal, unknowingly funding accumulation. Emotional behavior became predictable liquidity for disciplined actors. Key insight: understanding market psychology is as critical as reading price charts. Emotional traders fund opportunity. The quiet reversal teaches a harsh truth: price alone is misleading. Most traders look only at candles, volume spikes, or headlines, assuming that visible movement tells the full story. But in crypto, what you see on the surface is often only a fraction of reality. Beneath the charts, hidden accumulation, subtle wallet flows, and the timing of trades relative to regulatory announcements create the real market narrative. Large actors exploit these invisible currents to shift ownership quietly, absorb retail panic, and position themselves for the next significant move. Observing price alone is like watching a play from the lobby. You see motion, but you miss the orchestration behind the scenes. Every dip that frightened retail traders, every hesitation that looked like weakness, was systematically absorbed. Whales and institutions acted with discipline, reinforcing positions, ensuring that when the broader market noticed, the structural change had already occurred. Retail panic, in effect, became the fuel for this invisible strategy. Emotional selling created liquidity for strategic accumulation. In crypto, understanding the psychology of others, the fear, the greed, the misinterpretation of signals is just as crucial as reading charts or news. The warning is clear. Ignore the microstructure at your peril. Relying only on visible price action, trends, or public sentiment will put you behind the curve. The true signals are subtle, micro dips absorbed by unseen orders, incremental wallet transfers building dominance, and timing that aligns with regulatory events to mask real intent. The insight is equally critical. Success in this market lies in patience, discipline, and observation. Recognizing hidden accumulation and interpreting silent signals allows you to anticipate moves before they explode into public awareness. XRP's next phase has already begun. The charts may not yet tell the full story, but the quiet shift in ownership has been set. If you pay attention, if you read the microstructure carefully, you can position yourself ahead of the crowd, turning what appears to be ordinary market noise into a decisive edge. The opportunity is real. You just need to see it before the window closes.